All right, everyone, let's get started. Give me 1 second. All right, let's begin. Um, First of all, let's look at what's been moving, or what was moving yesterday, I should say. All right, so here's what we have. First up would be Airbnb. There was market open. Nice move up at the start of the day, pullback, and then continuation. Now, before I jump into any more stocks, I should also point out that yesterday was an extremely bullish day for the market as a whole. This is the NASDAQ, the QQQ ETF. Okay. And here is market start right there. And all we basically had was some upside, then it just took off, big explosion up. So most stocks will look like this, right? So yesterday, most stocks you could just pick at random and they were going up. So it wasn't that you really had to search hard for anything yesterday, just to be upfront about it. So BIDU moved up sharply. This one started from lows and then quickly moved up after gapping lower, quickly moved up and then continued to move upward. So this one actually, in my opinion, was one of the better ones because of it coming from lows. We had THMO, which was decent. Um, Mara, okay, over here, starting right there. Then moving up, Google, and so on and so forth. Okay, so not a difficult day to find good trends to the upside at least. So as long as you were buying, you did fine. Okay, now let's look at what's moving today, pre-market. And before we jump into that, let's look at our economic calendar. Now, if you're wondering why was the market so bullish yesterday, basically because you had a bunch of commentary suggesting that all the problems, issues will be shored up. The big thing was that Credit Suisse was bailed out, basically, and you had all sorts of other commentary that basically suggested that the government, the governing powers would shore up any problems that may occur. So as a result, markets were fairly bullish. Whether or not those proclamations will turn out to be true is another story. But the market seems to think that as of right now, there is very little chance that the Fed's going to raise interest rates next week. So with that expectation that the Fed will not raise interest rates next Wednesday, the markets have been pretty positive, and the expectation that um, all necessary bailouts will take place. Now, of course, the issue is right now we've only had to bail out, or maybe I should say bailout. Like right now, liquidity has only needed to be provided for a certain number of banks. But if that number increases dramatically, then I think things will change very rapidly. So we'll see. So today we've got preliminary U of M consumer sentiment, preliminary U of M inflation expectations, and CB leading index. So those are the three things at 10 o'clock Eastern. And then at 9:15 Eastern, we'll have capacity utilization rate, industrial production. Okay. So some news today, but next week will be bigger. So we'll see how the markets respond today. I haven't looked at the headlines overnight, but I'll check them out when we get into the coaching session. All right. Now, as far as what's happening pre-market, let's see what we got. Okay, as of right now, here are our movers before today's open. You have HUBC. Now, currently, the stock is up 25.11%, trading 3.4 million shares. So we'll go ahead and take a look at that at market open. All right, PACW probably will be active again today, as would a lot of other banking stocks. Currently, it's only down 9%, but I would expect that we'll get some more movement out of that. We've got Mara moving after earnings, so let's take a look at that. So Mara had earnings currently up 7%, 2.1 million shares. So we'll take a look at that at the open since it's coming off of earnings. Uh, the NASDAQ presently moving slightly down. Riot blockchain up slightly. Not enough. I don't think it's up. I don't think this is moving enough to pay particular attention to, but we'll see. So Riot, I mean, I guess if you want to, you can look at that. I'll put it down as a possibility, but I would like to see it a little more active than what it is now. PXMD looks like it's active. Currently up 15 over 15%, trading 2.5 million shares. So we'll add that to our radar. Right, HSTO is up. I don't think it's up enough to really pay attention to. It's up 31.63%, which is equivalent to about 27 cents. Not the type of movement that I think we would need. 1.6 million shares. If it was trading a lot more volume, perhaps, but for now, I would just say that's another one that's a possibility, but not one that I feel has the has a strong enough profile yet. It may pick up activity later, so I'll just put that down as something to reevaluate before the opening bell. Right. So as far as my scans go, that's all that they see. But I'm not scanning for everything. Let's see what else we got. Other than Mara, not much else really active pre-market. Most of these look like they're doing absolutely nothing. Tesla, of course, is always active pre-market. Yeah. I'll keep looking around, but that looks like that's it for this morning. Let me try something really quick. Let me see. All right. Let me see. I just expanded my search, so let me just see what else comes up. So that didn't add anything. All right. So it looks like that's it. All right. So let's just go back to yesterday for a bit. Just want to go over a couple of things and then I'll jump into the coaching room. Now, the biggest thing, actually, let me switch this back to ITC. Now, the biggest thing to remember, folks, is that the NASDAQ is the dog, is the tail, and the dog is actually the stocks that make up the NASDAQ. Meaning that when we think about what happened yesterday, it's just saying that the majority of stocks in the market were moving. So if the majority of the stocks in the market are going up, that's what causes the NASDAQ to go up. Now, stocks usually move in a herd. So therefore, if the herd is running to the upside, it means there must be some overwhelmingly positive news, at least to the market. Now, these days we have to focus our attention on what are the major drivers of the current action. Just to be clear, we've had a transition here, we had a shift. So before last week, most of the attention was on the jobs number, like unemployment numbers, manufacturing numbers, basically any government reports that came out. The market was focused on how they sounded and basically what the Fed was signaling it was going to do based on the data. So every time data points would come out, we would have an existing opinion about what the Fed is going to do with those data points, and then the markets would respond. The basic expectation was that the Fed would continue to tighten, in other words, to increase interest rates. But now that we see these problems in the banking sector, that completely shifts the picture to now the question is whether or not the Fed might even cut interest rates. Now, one of the things that I will point out is this. What got us into this problem in the first place was the combination of extraordinarily aggressive actions to increase liquidity in the markets through quantitative easing and things like that, just pushing that envelope for years, right? And then dramatically increasing it in 2020. So you had that on one side, keeping interest rates at basically zero for a very long time, essentially distorting the entire market dynamics for years. And then suddenly and aggressively and very quickly shifting gears to move the market completely back to a environment where interest rates are actually, you know, normal, more or less. Now, doing it so quickly is one of the reasons why you have, is actually the primary reason why we have so many problems. The scale of the treasuries and fixed government securities that are involved in the trillions of dollars that we're paying near zero interest rates or very low interest rates, and now you've got um, debt paying extreme, comparatively much higher, extremely much higher interest rates than what they were paying before. That distorts the market. It changes it very quickly. We're seeing movements in bond markets that we've never seen as far as the speed that things are moving and the severity. So essentially, the system is getting recalibrated extraordinarily fast. And of course, that's causing a lot of problems. So if the Fed suddenly reverses course and goes the complete opposite direction, they keep dropping rates or something like that, that's going to cause problems too. So, in short, the only thing they can practically do is just not do anything. When the next meeting occurs, they just leave things the same, and the next one they leave things the same. I think that's the only way to stabilize, and they have to be very clear to the markets that they will not change this policy, and there are certain things in the future that they may look at to change the policy, and they'll let everyone know in advance. So in other words, the more they signal to the markets what they're going to do, the less likely we're going to have problems. But the more aggressively they act, even if they are suggesting what they're going to do, if they just keep moving rates aggressively up or down, we're still going to have a lot of problems. Okay, so that's where we're at. All right. So other than that, folks, I'm going to jump into the coaching room here in just a second. I'll be using the Pro platform once I get into the coaching room. It was just a little easier to do this with this platform, but going forwards, I'll just be using the Pro platform. If anyone's not part of our services, maybe you watch this live broadcast and you're wondering what we do, be sure to check out fundertrading.com. It's our website. That's where you'll find out how we fund traders to trade on our behalf. We provide the funds for them to trade. So just go there and you'll learn more about it. For everyone else, I'll see you in the coaching room in about 8, 9 minutes. Okay? Thanks.